Hello YouTube, welcome to the live econ guy where we talk about anything related to economics. In this video today I want to discuss the plan of the Federal Reserve to reduce the size of their balance sheet, more specifically the mortgage-backed securities. Currently the Fed is holding about $2.7 trillion worth of mortgage-backed securities on their balance sheet. And if you've looked at any recent articles or read the Federal Reserve minutes, Jerome Powell a couple months ago announced a plan to reduce the size of the balance sheet by allowing securities, more specifically the bonds on the balance sheet, to mature or run off. So I want to take a quick look at the actual mortgage-backed securities balance sheet. So this is how it looks like. At the moment, the Fed once again is holding $2.7 trillion worth of these bonds. And if you look at this graph, you'll see that they've been accumulating them over the past couple of years due to the COVID pandemic. And in recent months, the line kind of flattened out. This is due to the fact that the Fed is no longer buying mortgage-backed securities. And in fact, they do want to reduce the size of their balance sheet in regards to these bonds. So the plan in detail looks something like this. So Jerome Powell announced that they're going to sell $17.5 billion worth of these securities from June of 2022 through August 2022. And by sell, I mean allow them to run off, which means that they're going to mature and the Fed is not going to reinvest them. And starting September, they're going to allow $35 billion worth of these securities to mature or roll off their balance sheet, and they're not going to reinvest. The catch here is that anything past these two thresholds, $17.5 billion and $35 billion, anything that matures in excess of that is going to be reinvested. Next, I want to mention kind of a flaw in this plan, because at the moment, almost all of the mortgage-backed securities that the Fed is holding, they're not maturing for at least not in the short term. So as you can see here, the yellow line represents the threshold, so the amount that is allowed to roll off each month, and the red line represents the potential amount that can roll off. So as you can see, there's nothing really maturing in the short term, so nothing to actually roll off, which is really interesting if you think about it. Why would Jerome Powell announce this kind of plan if there is no mortgage-backed securities to actually run off? Like, what's the point of creating this kind of guidance if there is nothing to actually sell? So what I think might happen is that the Fed might end up trying to sell some of these mortgage-backed securities directly to buyers, which is really interesting because there have been recent news that mortgage-backed securities went on auction without any bids. So the Fed tries to sell these directly to investors. It'll be interesting to see how this might impact all sorts of things, such as mortgage rates and house prices and other and any other kind of volatility that it might cause in the markets. So if you have any kind of interesting thoughts, feel free to comment in the comments section. Let me know what you think and what you're seeing here. And also please like and share my video to get the algorithms to do their things. Thank you guys. This has been Live Economics Guy.